Yo, what is up? Sharky is having some. Look at this guy. Can't get his camera to work. That's all right. What's up, everybody? I'm going to bring Sharky down for a minute. Happy Monday. Market definitely has a case of the Mondays. Today was looking amazing yesterday, Easter Sunday. And guess what? April Fools, they got ya not happening. So, anyways, hopefully y'all make it. But it was gap day. If you're in the groups, then you know how to trade gaps. And we had a clean reversal trigger, and you should have been able to catch that. I didn't trade this morning because that gap was not looking fun out of the gate, but I'm hoping that we can start basing out here a little bit. Sharky's definitely having some problems with his cameras, but that's okay. We got a lot of stuff to go over today. But let's get to it. So I think, today is the first day of the second quarter. And honestly, it was a really good quarter, And I'm not surprised to see some profit taking here now. But let's not forget, it's still a election year. And we have some charts actually that I think are pretty interesting. And I'll kind of go through those a little bit later, just to kind of show you guys where we are in that cycle. But again, if you're new to the channel, welcome. What we do here every Monday at noon is we kind of go over what are some of the major events that happened last week. What do we need to look out for this week? And kind of go over some possible trades that are playing out. Sorry. I trade for a living. We'll probably have Sharky here in a little bit if he gets his technical difficulties fixed. And the idea is it's to make money. So hopefully you guys are able to make some money with us. But if at the very least, you should be able to take this information and kind of plan your week around it, right? What do I need to look out for? What's important in the market? What do I want to stay away from? Maybe more importantly, and a lot of those kind of things. So just moving forward, it's a lot of price repricing right now is what we're seeing, right? And we can kind of go back to some of the candles, go back to the market last week and see where some of the major pivots were. We'll take a look at SPY and the Qs. And if you guys have any, I will pop up the chat. If you guys have any questions or want to look at some charts, definitely oil and dollar ripping. Those are absolutely top on the list of what we want to look at. Go ahead and throw them in the chat. So we are reading those for sure as we move forward. A couple like smaller headlines, or just headlines that I want to be aware of, right? So number one, markets are repricing the rate situation right now, right? And the question is not whether or not we cut rates or the Fed cuts rates. It's more of like when. And based on the when, look at this, Chris White. School of Gains is huge. That's we're not open yet, but we do have a wait list. So feel free to hop into the wait list. You will learn a ton. Where was I? Sorry. So we're repricing, markets repricing where they think, the rates are going to land this year. And I think it's really all about that, right? So what I can say right now is, this is just my personal opinions. I know if Sharky gets back on, he'll have some opinions. But for me, I actually really like this. Like, I think it's pretty constructive. I'm in the camp of if we don't actually cut rates, I think that's the most bullish. So what I'll say is, a lot of us have been on this, buy the rumor, sell the news. And honestly, it's right now we're in the rumor camp. So we don't have the news. So the rate cut hasn't actually happened. And that's actually a really good thing. It will come to be a sell the news event. I'm just telling you guys this right now. When the actual hikes, when the rates do get cut, is it going to be a major one? Probably not. Is it going to be a buyable dip? That's my guess. But it's a point in time where I don't want to be pressing bets, and you definitely want to just kind of chill out and see where the market goes from there. But for now, the longer that the Fed can kind of push off rate cuts, in my mind, the better it is, right? Because the market's anticipation of rate cuts is actually doing a lot of the Fed's job for them. So that's just my 2 cents. Take it for what it is. I'm not an economist, but I think that puts us in a really interesting place in the market today for a lot of really good setups. A couple other headlines: UPS replacing FedEx to become U.S. Postal Service primary air cargo provider. I think the UPS setup is interesting, right? I don't know that it's ready. It's obviously not ready. It was a huge, like, we call it a kill candle, last week. And that's a chart that I do want to kind of go over. What I'll say is markets are either running or resting. You guys heard me say that a million times. I think it's time for UPS to rest, but it will be time for UPS to run eventually. Obviously the market did not believe after their investor day, the market did not believe the CEO's commentary. I thought she was pretty bullish, but the market kind of thought she was too bullish and said, no, that's not happening. But the net of what I got out of her kind of spiel was that the back half of this year, they're expecting to see some growth. But the market's basically saying, yeah, you're expecting too much, and it's a show me story. So, take it for what it is. A couple of the headlines, interesting to me: Microsoft to separate Teams and from Office globally amid antitrust scrutiny. That makes me think about our good old friend Zoom, right? And honestly, Zoom, it's really hard for Zoom to compete when you have the likes of like Microsoft just giving away Teams for free. And that's literally what was going on in the enterprise. So it was very hard for for Zoom to compete. You also have Cisco WebEx, who's pretty much, one of the other leaders, if not right up there with Teams. And then Citrix had this product called GoToMeeting, which has pretty much died. So Citrix is out. That left WebEx, Cisco WebEx, and Microsoft Teams. WebEx had that kind of like the smart rooms, which I think Zoom really did go after, but it might be time to take a look at the Zoom chart if something does go down with that. And then 3M. So 3M has a turnaround story in the midst. If you guys are not aware of this, there's a new CEO over at 3M. Take a look at that chart. It's at a very compelling spot. And they spun off Solventum, which is like one of their healthcare arms today. And I own some 3M shares, and I was like, why does this look down? And I'm like, oh, I didn't. Hello. I got some other shares now. So I think it was like for every 4 shares of 3M, you got 1 share of this SLV something, SOLV ticker. The other stuff, oil, man, epic move today, and just follow through, sitting almost crude futures over $84 a barrel. That's huge. Major move. Uh, it's hard to press a bet there personally, but I did catch a lot of it. This is a story that, we're getting into peak travel coming into the summer. My bet is that it could run. So that said, I think I would rather pick a spot like a nice little pullback. We'll take a look at that chart also, but we're breaking through some serious levels here, and we do have some data that we can look at from last week that kind of gave us this extra oomph that really kind of like solidified that move. There are two headlines, ticker set specific, that I wanted to touch on. Celsius. If you guys don't know, I'm a big Celsius fan. I don't have one with me this morning. But if you're wondering why Celsius was down last week, it was actually because they had redone their distribution deal with Pepsi. And it's funny to me how, like, okay, Celsius is barely getting out of the US. I think they're finally in Europe, but they're not really global yet. They're getting there. And this deal that they redid with Pepsi for just the distribution deal basically gave Pepsi some like added incentives, basically margin, and Pepsi will get paid a little bit more for any distribution deals they do with Celsius, right? And a lot of the analysts were like, oh, well, that's going to dink Celsius's profit margin, and the stock ends up being down. So, if you're longer term on Celsius, this is one where you're like, you know what? Maybe near term, a little bit of profit, cuts, very small, I'm guessing. But, longer term, it just makes me keep going back to that Monster chart, we're like, number one best performing company in the S&P 500 is Monster Beverage, believe it or not. And Celsius just growing exponentially. That adds a little fuel to that fire. So, at the expense of a small piece of margin, probably worth it, but the chart will tell you when to get in. But I think it's close. Another one that we rarely ever get a dip buy opportunity on is Arista. There was a founder that settled for $1 million over inside trading charges. There was a dip last week on Arista, ticker ANET. If you don't know, it's one of those tickers where we rarely get a dip buy opportunity. And looking like it's going to recover today, basically put it right at the top of a prior resistance level. So definitely something I'd put on your radars for a watch. So anyways, so that said, I mentioned this election cycle. We've talked about it a couple times. Here's the truth, right? So this is like a 100-year, give or take 100-year history of election cycles. So year 1, 2, 3, 4, 4-year cycle. So we are in the last year of this election cycle. And honestly, this is a good spot to be. Year 1 and 2, not really a big, market mover, but the second, the third, and the fourth years are your two best years. And so last year in October, that was actually look at this. This is how spot on this is. October, this is September. So October was right here, and that was the lows of the market. And I feel like we have rallied almost like this is pretty freaking accurate. So what I'll say now is that we are here. Looks like Sharky's there. I'll bring you up, Sharky. You don't have video, but you might have audio. We are actually, so this is March. So first day of April now. So this is kind of so June, we definitely kick off. And I'll tell you what, June is probably the most bullish, June, July, most bullish month for Apple. So that might be kind of like the precursor that kicks it off in their their next AI conference. Aloud makes no sense. Oh, Sharky definitely still having some issues. Who knows? Anyways, so what I'd say as I look at this, it's I'm not super interested in any kind of long-term shorts right now, and I don't know that it's the best thing to do that either. What I would say is it's definitely shopping list time, right? So if you don't have your shopping list, if you're not watching us and what we've been doing, this is where you get your shopping list for sure. Somebody's asking for charts on snow. I think this is going to be, hopefully, we used to call snow the winter soldier. And then if you know the story of the winter soldier, his name is Bucky, but Bucky went back to Wakanda, got a new arm, came back better and stronger. And I think Bucky is at least thinking about coming back from Wakanda. So hopefully Bucky comes back bigger, better, and stronger. But I will say I've already started that position. Well, I will definitely go over. Ooh, there he is. Boom. What's up, man? He's in the house. There he is. He's alive. Look up, Turkey. You're on. Welcome, my friend.
Hey, buddy. What's going on?
Oh, what's up, man? How was your morning?
What was going on with that? It was so weird.
It's okay. It looks like you got some internet connection issues, maybe. So you're a little fuzzy. But that's all good. How's that gold this morning, dude?
Yeah, it was beautiful. It's a nice move. Well, we're gonna see here if it can continue.
I'm shocked.
But the dollar is having an issue. The dollar's almost at 105, which is crazy.
Yeah, so I'm shocked that gold is able to do what it's doing right now with not only the dollar, but the 10-year flying, right? So both of those two things should be major headwinds for for gold and that whole gold trade, which is why I took a little safety trim on Thursday beforehand ahead of PCE. But I gotta say, man, that is some serious strength watching gold be able to do what it's done so far with the dollar and the 10-year rallying that way. Yeah, that's not normal. I'll just say that. And most of the time you think of gold, you think of it as safe haven type of trade, things like that. Yeah. it's maybe a little bit of that, but um, yeah, it's a strong one right now. We talked about this 2 or 3 weeks ago. Maybe the absolute best looking chart in the market, gold. Here we are, sitting at another all-time high. I mean, hello, literally the best chart in the market. So
Hello.
I don't know why it goes any. I mean, I don't know why it stops, but it can take a breather. That's for sure. But I think, look, I'm not quite at my targets just yet. So trim, yes, for sure. Um, you know, it's all good. Like, speaking of MCU, okay, Sharky looking like Quicksilver. Yeah. Oh yeah, man. Yeah, GLD. That's the ticker for sure. Super strong today. Um, I see that TradingView is launching tarot feature. No, no, I did not. TradingView is launching a tarot reading feature. Wow. We'll see how she stacks how they stack up to Miss Cleo, man. I don't know. But let's get on with this. So Sharky, we're just talking about seasonality. Not just so we were talking about the 4-year election cycle. And I hadn't started talking about seasonality yet. But what I will say is that, I'm gonna go back to our friendly trend spider chart, and I'm going to pull up one more time SPY, and I want you guys to see this too. So on this setup, what we didn't have, and I talked to Jason if he's around, props to him. He sent me a video of like a couple of little things that you can change. So this is, I believe, the default view, but under this tab, oops, it shows paper gains, but behind that paper gains icon, there's a little thing called granularity. You can click that and change it actually to the week of the year. Look at this, right? And it'll tell you you're here. And if you hover over like this little blue line, there's a mean change. It'll actually tell you what's the average change for that week, like 0.6%, 1.3%. But over the next 1, 2, 3, 4, 5, 6, 5 weeks, over the next 5 weeks, this seasonality for SPY is positive, right? And then this would be the next dip to buy, which would be week 19, 1920. But head over to TrendSpider. This is just seasonality for SPY, SPY. You can also type in QQQ. It's right here on the sidebar. It says season, right? Add to sidebar, and you can expand this. Click this mean change, and it'll show you, hey, this is the actual change for the month of April. This is the Qs, 1.6%, and you can get it as granular as the weekly change, down to all of these. So, kind of interesting across the board. So what does this all say? So right now, back to where we were on the cycle, the election cycle, we are still here, right? So right about towards the lower half of that little dip. This year it's been more of a sideways price action than anything else. And, maybe 6 or 7 weeks down the road, we might get another little dip to buy. But between now and then, what I'll say is that's May, right? What I'll say is, I don't know that the market's going to be lower than it is now when that dip actually comes. So I would say start looking looking at your shopping list now. If you're not already in them, Apple, we just talked about that. June, July is its annual rally period. Very, very strong, like strength there. I'll just show you this. You can do this by ticker too. How cool is this? So monthly, this is July. Average return for Apple in July, 3%, June, 5%. So you have like 8%, and you want to buy it at June, right? Like the low end of the year of June rallies, July, August, and then it'll dip a little bit more and then rip into October. So this time of year, right about now, is usually the time that you do want to buy it. So anyways, putting that off to the side for just a little bit. Oops, wrong chart. So seasonally, in a good spot. From an election cycle perspective, it's about time to look for those dip buys. And then we talked last week about what are we talking about in terms of the rate situation, right? And I said this morning that the markets are starting to readjust or reprice what's the current market situation. So this was a screenshot of the CBOE Fed Watch tool this morning. This is for June. What was interesting, and we talked about this last week, and I said if the market re-rates this so that there's less rate cuts priced in, slower probability of a rate cut priced in, that's going to be better for the market. That's a better entry point. And that's exactly what started to happen this morning. So this morning when I took this screenshot, 44% probability that we have no change for June. I think May is pretty much out the window right now, but they're starting to price out this rate cut in June, which is really good. And then I move forward to July, and this had gone from like 25% to a 32% probability that we're even exactly where we are in July for the Fed Watch tool. So this is what is priced into the markets right now. I think this is actually a good spot in general. We'll take a look at some of the charts too in a little bit, and I will say that SPY from a longer term perspective is right now at a spot where every time it's hit, it's been a buy. I don't know that anything changes. So has anything changed in the market overall from a fundamental perspective? No. One thing we didn't talk about yet before I get into the rest of this data is that what Powell did say the last time he was up there, he said that they're going to start looking at the labor force, right? So if jobs data starts coming in weaker, he said that would be a reason to change policy, or that would be a reason to start cutting. So jobs data, not jolts, but like claims data, things like that, has not been a market moving event. What's up, Ryan? Has absolutely not been a market moving event. Not something that we've paid attention to, not something that's like moved the markets whatsoever. I'm just going to tell you right now, based on those comments, they probably will, and we should start paying attention to them. So we're going to put them on the radar. So last week, there wasn't much to go over. That we had a bit of a rally midweek, and that was via like a 7-year bond auction. So remember, we've been talking about what's been moving the markets, this rate story, those bond auctions. There was a lot of interest in the 7-year bond, probably shockingly. And so, interesting enough, it was a very good auction, and the markets rallied off of that. So, that leaves us really with Friday's price action. And why is the market kind of like wishy-washy today? So PCE, probably number 2 in my priority of like what's important from an economic perspective. Coming in pretty much in line across the board from a headline perspective. So we have two readings. So we have the core, and we have something called the core, and we have something called headline. So headline is just it just says PCE, and the core does not include does not include like food and energy. So the things that we actually spend our money on every day, they take it out and they say, oh, we don't really count that. So whatever. But so core month over month, core year over year. So month over month core exactly in line. So again, markets do not move on anything that comes in at consensus. What consensus means when you look at this stuff, that means the market is priced this in right now. So the only thing that's going to move a market is if it's different than consensus. So again, core month over month, exactly in line. Core year over year, exactly in line. Headline month over month, 1/10 lower, not much. Year over year headline, exactly in line. So headline, core, major numbers, really nothing. There's one piece that actually did stand out and probably makes the market move a little bit. And what we're seeing some of this pullback from is really, so personal income coming in slightly lower, but personal spending coming in significantly higher. So it makes you think, we're not making more, we're making a little bit less, but we're spending more. So the question is, are we spending more on the same or less, or are we buying more, right? That we don't really know. I don't really know. I don't think there's a way is there a way to find that out, Sharky? I don't know. But what the numbers say is, look, we're making a little bit less, we're spending more. probably spending more on the same stuff. And so that's where the market would have a little sense of hesitancy. And what we're seeing in the market, I think, is due to this, honestly, is just that re-push back up to rates. I don't think this goes any higher. I think this is a great spot if you're someone that sells premium. I'd be selling puts on TLT all day long right here, off this move right now. I wouldn't buy calls. I'll tell you that. I would be a seller of puts. Anything under 92 for sure. But anyways, peak rates to me are in. I think this is it. The other stuff, somewhat concerning. So we've got these manufacturing indexes from each little region. So there's like the Empire State Manufacturing Index. And we just got this Dallas Fed Manufacturing Index. This has not been moving the markets, but I'm just going to put it on the radar. From a manufacturing index perspective, this stuff has been coming in absolute horrendous. Consensus of -8, actual number coming in -14.4. That's brutal, and it's just getting worse. And we saw the same thing with the Empire State Manufacturing Index. And then the other thing I want to note again here, and Sharky will maybe have a note on this, is oil. So every Wednesday we get the oil status report, and there was a big change last week. And I know we're going a little bit into this right now, but from a crude oil perspective, guys, this is the first week I've seen in a very, very long time where they're refilling, they're buying, right? So crude oil stock exchange increase. Consensus was negative 1.275 million. We went up 3.165 million. So to me, I'm reading this, okay, across the board, we're probably refilling the strategic reserves. That's good. That's also good for refiners. And we're seeing this continued rally in Exxon, Oxy. What a breakout in the making. Probably Chevron. Your biggest beneficiary is going to be like Valero, things like that, MRO. I'm just assuming. I'm not even looking at the charts. But those are the refiners. And my favorite of the bunch is OIH, or the Oil Services ETF, and SLB inside of that ETF. I love that. So again, this is bullish to me for oil stocks. I think this is just continued confluence. But 1 week doesn't make a trend, obviously. Overall, though, it puts them in a good spot. So moving on to this week, Sharky, if you got anything you're watching this week in terms of headlines, let us know. Oh, I did not put this on there, but Disney does have an investor day coming out this week. This is their website. So April 3rd, if you didn't know, that is what day? Today's the 1st. That puts April 3rd. Hello. Wednesday, after market. So if you guys remember, hopefully you've been around long enough to know this, but the Disney earnings call used to be like this non-event. And Disney used to move 10x on their shareholder meeting than they did on the earnings call. And this is that shareholder meeting. So probably worth taking a look at this week. It's at a pretty interesting spot from a technical perspective. Sitting, last I checked, right around 120. I like that, actually. I like it. And officially best performing Dow stock for the first quarter of the year. How about that? How about them apples? If you're in the server, you got it at 80 something. So we're near our first target. I'm actually going to move that target up. And I know Sharky was looking at some Disney swings. I think that was high up there on your watch list, man. But again, so moving forward to the rest of this week, nothing major today. Jolts tomorrow. We talked about watching this labor market, and guys, we just have an insane amount of Fed speeches all week. I don't know what to tell you on this. It's going to be very confusing to the market.
Big thing. We're running through that Fed speaker gauntlet this week.
Oh, it's brutal. It's brutal. And they sneak Powell in right in the middle, right? So let me pull up the calendar really quick. So here's the actual calendar. I'll just like Fed, right? So Monday, Fed Cook speech is 18 speeches. Get that. 18. Tomorrow. 1, 2, 3, 4. Wednesday. 1, 2, 3, 4, 5, including Powell. Friday, 1, 2, 3, 6. Like this, it's just brutal, absolutely insane. So, I mean, we got a ton of these speeches going on all week. So expect some serious messaging campaigns. You know, like I said, I think they have to keep their credibility. So they'll talk about I don't know. We'll see. We'll see. I think the market's going to be, it's going to be very confusing for the market to try and listen to 18 different people speaking, having all these different opinions. So the only one I'd really say is Wednesday when we get Powell's actual speech. That's going to be important for sure. And then
Do you know where
Thursday,
he's speaking at? Because I saw he's speaking at what is it, 12 o'clock on Thursday? Was it?
yeah. Let me see when. Yeah, it's 12:10 Thursday Eastern. I don't know where. I don't have a where on that,
Yeah,
but it's a high impact item. That's what I could tell you.
yeah.
And then Thursday we get jobless claims. They might talk about the labor situation, right? Like he did. That was the only thing he mentioned last time, where he was like, "Look, if the labor situation changes, that might be a reason to do something different." But we'll see. So, anyways, I mean that's going to be important. And then Friday. So I think continue on, stay the course for all of that this week. And then Friday, we get the all important non farm payroll number, which resets the market on Friday. And if you don't know, what I'll say is that every Friday, every first Friday of the month, um, to me, like the month doesn't even start. And to me, we're still in March from a market perspective, and April doesn't really start until after Friday. Um, and more often than not, the first Friday of the month, when we get that NFP number, it will mark the high or the low for that month, right? And so I think that day is going to give you how the market digests this coming Friday will give you the rest of the trend for April on the market, period, point blank. That is fact. But it'll give you a little sense of what the market's also feeling as we go through that day, right? So, it's a big day. Sometimes it's a major move on that day. Sometimes it's a flat day, but we trade everything up to and including NFP Friday, just like normal. The only thing that changes after Friday, we're really kind of like sit on our hands for a little bit, see how the market digests this. Because sometimes, especially if Friday is a big move, sometimes the market goes nowhere for a full week or two, and you don't really want to get caught in that kind of chop. So, so that's what I would say about Friday. It's full steam ahead until then, to me, and then after that, it's a reset. So that's my 2 cents on Friday. Sharky, you got anything you want to mention in terms of what to look out for this week?
No, I mean, I think you really covered all the bases there, with the Fed speakers and Powell, and I mean, you got it all right here. And of course, we have your monthly holiday, your NFP day. So your
It's not a holiday
your
because I definitely trade that day. That's for sure. Um, but
So
yeah,
no, this be
it's
interesting. No, but you covered all the bases. I mean, I guess the only other thing, we have initial jobless claims on Thursday at
yep.
8:30. So
Yeah.
yeah, you have that on there. I'm sorry, I didn't see that one. My eyes are.
Yeah, like I'm saying.
But
So,
yeah, so we'll
per
see.
Powell's commentary, the labor market is going to be important, right? So, y- 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 for the most part, if you've taken him at his word, you've done well, right? So, that's what he's saying. I would pay attention to that. In terms of earnings this week, it's pretty flat. Everything's gone through again. 29 beats, 1 meet. That was Honeywell. No misses. Pretty flat coming in to this week. What do you have? So we have. Do we have some REITs hitting pretty soon? We have Paychecks who's dumped a couple times. Some more healthcare. Um, Levi's, Sports and Warehouse. No, I don't have any major REITs. I would say, the REIT space is starting to look really interesting to me. I'll go back to my Boston properties. And we have some back and forth with Uncle Frankie. there's some rhetoric around, commercial backed real estate loans, things like that. But KRE and the REITs are looking like, if that's all just noise and FUD, those are going to be some really good spots to start picking at, right? But do your own research. Make sure that you pick one that you like. There will probably be some weeds to get pulled, just like there were in the regional bank sector, where some things get rugged because of some bad loans out there. So I know it's happening. It's kind of what's holding back some of those industries right now. So once we get out of that, then we should actually see some pretty good moves after a while. So anyways, yeah, I'm not, I thought that was MViz for a second, Microvast. That's not Canoe this week. Yeah, really not anything. Oh yeah, NYC REIT. So that might be one that's a headwind for the rest of the REITs. I would look at that. I think one of these guys didn't pay one of their major bills, but we'll see. So anyways, that said, are you ready, Sharky? Did you get Miss Cleo's reading? We're ready. Let's do it. All right, guys. So here is the reading. Did you take a look at this yet, Sharky? This week?
Oh no, I haven't had a chance yet. But oh gosh,
So
the Fool. Right, this is a perfect theme
This
for
is
April
April
Fool's Day
Fool's
week.
week, right? Yeah,
Yeah,
April
wow, look at
Fool's week.
this.
We got the Fool. There's the Eight of Wands. The King of Cups. I remember this card. You guys have to remember this card right here. This is the one where like the person. Let me see if I can zoom in. Yeah. So there's the man sleeping in a pool of blood underneath all of these swords. This is the one
That's
that
a
always
good
gets me.
card.
That's a bearish card. I remember. And then the Knight of Wands and the Moon. The Moon, Sharky. This is one of your cards, right? This is
I like
the
the Moon.
Wolves. The Moon. That's a Arcana card, you call it. King of Cups. So 8, King, 7, Knight, and a Moon. I don't know. See what she has to say. So what I did this week, I kind of chopped it up, right? So the theme card. I know a lot of people think that the market is acting foolish. This is what she's saying. A lot of people think that the market is acting foolish right now, but this card says that the foolishness is likely to continue. How about that? This means we should expect upside pressure to start the week. Yeah, gap up. With possibly some major retrace. Okay, we got the gap fill and then reverse already to end the week or early next. Well, okay, she's I don't know how she's doing so far. This card is not bearish, so let's see what the dailies say. So in terms of dailies, so this is what I did. I just kind of like took these. So Monday, 8 of Wands. Do we really care about today? Because it's pretty much over. Means action will be even crazier than normal. This may not be a trend day. Yeah. Card typically finishes near the open. All right. Yeah, we're already.
Well, I
Yeah,
like that
gap.
I'm long.
Yeah, I would be long. I would be long. This could be a day trader's paradise, but a swing. Hey, perfect. Swing trader's nightmare. Fool says we may see pressure to the upside throughout the day. Well, she was wrong on that one, but we'll see. At least a couple hours. Or Tuesday, King of Cups. Interesting to see here because the King of Cups usually occurs during a day of volatility. Fool is supposed to be taken as higher. Card usually quite bearish. Historically, but also says not to bail out and give in to panic. Hodl and take a chill pill. This might even be a great dip buy. So maybe up, then gap down tomorrow and dip buy. 9 of Swords for Wednesday. Looks like we're in the firing line once more. And Tuesday may, what? May not have been the dip buy I thought it was. Wow, Miss Cleo. This card says that we're having nightmares. Oh, yeah, this is the nightmare card. And unable to sleep, it often brings the gap down. Oh, God, that gets bought up. It can also, so this is a buy Wednesday dip. It can also bring sudden selling in a quick shock event. The important thing to know is that this card is like the King of Cups, says we should avoid worrying. Maybe this is the dip buy. Usually when I see that card, it is. Thursday, Knight of Wands. The Knight of Wands. We're ready to fearlessly charge into battle. What happens Thursday, Sharky? Disney happens Thursday. An attempt to dig ourselves out of this hole. The challenge is that this card often runs out of steam on upside action and usually finishes red. Whatever. Look for an early trend and move that gets reversed. You guys know I don't read these beforehand. Reversed around lunchtime. The full may give us a stronger boost than normal, but it seems to me that we should be selling rallies here. All right, fine, whatever.
Interesting.
So is she saying that we've hit the peak of the week already? Whatever. Friday moon. We go to the moon on Friday, Sharky. Is that the deal?
See.
The major arcana card and therefore brings strong energy. It can have trend day Friday. That's what I hear. Illusion is revealed and the truth comes out. This is often corrective. I need a wah. I don't know. Anyways, we do what the memes say and price moons. Oh, okay. She gave nothing here. It can either go up or it can go down. What is that? Boo. Anyways, note that we do have a new moon next Tuesday. So seeing this card here is wild. Oh, she's talking about the actual moon. Is that a thing? The way I would play this is a key pivot outplaying. The way I would play this is a key pivot outplaying on knee reversion from the dominant action into Friday's open. Does that make sense? If we're at the top of the weekly range, we probably correct. If we're near the weekly lows, then it's time to bounce out of there. Okay. She don't really know. But she does say Friday trend day. So recap, fools say we should rally, but the card suggests weakness for much of the week. Which sets up to me, I think, for a crazy Friday. With the chance of rally on Monday, Thursday, and Friday. Oh, well, Monday we got it. That already happened.
Well,
There
the
you have
Fool,
it.
is a pretty powerful card. It's the first one in the whole sequence of the majors, and
Yeah.
and so we'll see. It sounds like we definitely could see with that big down day this week potentially, and
I think we got a lot of it.
Of course, we'll take it all with a grain of salt, and we'll let the chart be our guide. But but it's interesting.
It's interesting. Let's get to the charts, man. Here we are.
Is that the Wicked Witch of the West?
This is the Wicked. The Wicked Witch. So here's where I start every week, right? I use a 30-minute chart. I love this chart from an analytics perspective. Just gives me a good view of what where the buyers and sellers really stepping in. So one thing's true. We had a gap up this morning. Pull back down, retrace half gap, right? If you're our groups, then you knew that this half gap, we weren't really going to be bullish until you're over 524 spot 50 or 50. And then till then, you expect that gap to fill, which we did, session gap 523, and extend if you reverse the gap. If we close over the gap, then we're probably back into neutral, I would say. But from here, I wouldn't be short. And I wouldn't be short because check this out. This green line, if you don't know, this is the annual trend line and just about the 20-day simple moving average. And no, it's not this 20-day, but the annual trend line. Every time we've gotten close to this, what has happened, right? We have bounced, and we've bounced pretty significantly, including last week. So has anything really changed here to change this narrative for me? No, it hasn't. But let's just see what the cards play out, right? Because Friday we do have a big old day, right? And this is last Monday or last month's NFP, right? And so this is what I was saying, just as a like visual. After we get our NFP print, it's really just like stop, sit on hands, because you don't know how long it's going to take for something to break out, right? And a lot of times the market will digest, and this was a week and a half of digestion before SPY finally broke out of this range. And you didn't need to catch that breakout. If you did, great. But if you didn't, guess what happens 9 out of 10 times is that you get this beautiful retest. Boom. right there on the top of that NFP high. So patience pays on this stuff. For right now, I would trade off this annual trend line. Like I said, I don't see any reason why that story changes right now. So, as an aside, here are the Qs. So the Qs have been in a tougher spot all month. They have not broken out of that March NFP range. And so this is exactly what I'm talking about. So this entire month, where have the Qs gone? Whole lot of nowhere. And when I said, more often than not, that first Friday of the month, the NFP month day marks the high or the low for the month. It was basically the high for March on the Qs. Damn near the lows too. So we really just haven't gone anywhere.
Yeah,
So we're gonna get a
QQQ is
new
just
range on
stuck.
the Qs. Yeah. And again, this is why reset after Friday, right? Trade normal between now and then. Normal meaning this is your overhead resistance, this is your support, this is your range. In between, you're just trading this range. That's it, right? If you're fully below, it's a short, right? And then, but again, you're not really swinging until you're really far away from these ranges. You want to be further away, or you want to look for a retest, right? And that's honestly, that's just how they work. If we do have an average week's range for the Qs, this is the most interesting kind of setup since we have not broken out of range on the Qs yet. It's kind of getting back into that little bit stronger season for them. They've been held back quite a bit. The Qs have been sitting really about. This is on my chart. Here's a 50% of that range of this March NFP range. 50% in line 443.60, 443.70. 618 is 442.50. We tagged that once in the last week. That ended up being the low. Right now, we're locking in a higher low. Don't have a higher high, but this is. I don't want to get too bullish, but like this could be a nice little basing formation that does set us up. But again, we're not there yet. For right now, as long as we're over the halfway point, I think you kind of stay, more like non-bearish, if that makes sense. But the real dip buy is going to be towards that 438 if you get it. I actually don't think you do. But an average week's range to the upside does reclaim this annual trend line on the Qs, which is all of this. So the Qs right now is below it. If we do get an upside move, an average week's range will put us right back to it. That's about 460 on the Qs if you take from today's lows. So interesting spot on the Qs to me for this one. And then again, SPY doing the same kind of thing, just kind of puts you right around 430 for an average week's range. Right now, it's all kind of similar. It's kind of like setting up to me for this little, little range break. But when we're in this kind of setup for SPY, you should, to me, I don't see why you would be thinking puts. But it's more like at least just wait for your spot. IWM, this is toughy, right? This has been the range. If we get a spot around 205, I take the shot again and reload on this guy. Or if we break out, retest and go. Otherwise, dip buys are going to be right on this 205 to me and that 20-day. This remains to be like the best kind of bullish setup, but is today the spot? Not necessarily. That would be more like it on the Q on IWM. So let's take a look at the dollar really quick. Because I know Sharky's been feeling pretty bullish on this guy. He's gotten a move. I've not wanted to be bullish on the dollar, but here we are, right to a really difficult level.
No, yeah, don't get me wrong. I don't want to be bullish on it.
I mean,
but
you wouldn't want to be bullish, but this was like that max pain kind of level for me, kind of like hitting here. We're breaking out of this, but I don't know. Like I still see like, could we lock in a lower high over here? Yeah, I would like to see this play out. And this would play out where I'm going to take, if not to be an ICT person, but I'm going to take this spot right there and call this a fair value right in here after this big giant dipper candle when the market kind of created, like a little, what do you call this? Like low volume pocket. right in here. That takes you to right on 105. Call it 105.6 on DXY or the dollar. It can go up as high as 105.73. I don't want to see it anywhere over 106 by any means. I don't think. Yeah, because that would just put it right back into
I
that
really
major.
get nervous under over 105, but we'll see. We'll see if we get a weekly.
Yeah,
It's such a big
well,
area. We'll see if we get a weekly close. Then we
yeah.
can start.
Weekly is
But
going to be different, right? So
it gets a little
what
head
I'm saying
over.
is like inside this, if I see this tag 105, this is the setup, right? Everyone's going to be just like you're saying, freaking out, right? Over 105. And then if we lock in a lower high after that, then I think it's time, right? And so that's the setup, not here, right? But it'd be after a lower high like this, after we get it, right? And that kind of like flush out in weak hands or like get everybody scared, do your little stuff on liquidity grab. That would be par for the course on any normal chart. Not that this is, but that's what I would be looking at. That's what I will be looking at this week for sure. In terms of the TNX, this is the 10-year yield inverse to the bond. So I talked about TLT earlier. I think like selling puts around here is more ideal. Do I think that we really, and I would be selling like a $90 put when it's under 92. I feel like that's a layup. But yeah, just back to the TNX. I think this one, it's a very similar spot, right? Like, can it pop up a little bit more? Maybe. But if it does, I feel like that's the real kind of like slam the table buy opportunity for the market from a broader perspective, quite frankly. And that would probably put us in a spot where we're not really pricing in any rate cuts for the year. And like I've been saying all last week and this week or last few weeks, that's probably going to be the buy if we get it. But honestly, anywhere up here, I think is decent. In terms of this stuff, right? Like this seems over. This seems right into resistance. I'm already looking like this would be a spot where I would not want to be long. I would want to be short. But let's take a look at crude. So if you're worried about crude, this thing, super interesting. Sharky, do you have any levels on crude? This is CL futures. This was the base that we were talking about, all below the 80 level.
Yeah. No, I mean it's again, it's a similar situation as the dollar. It's kind of bullish until proven otherwise. And normally, obviously, we can look at crude kind of also as a little bit of a hint into potential inflation readings. So we'll keep that in mind. But I mean, unless it gets back under that base of that 80 area, I mean, then it's still bullish. So. And the other thing is, we do have some other, I think there was some news out today. Somebody in the chat was posting about escalation in the Middle East. So we'll keep an eye on those headlines as well as, of course, that can affect inventory and supply stuff. So we'll see.
Yeah.
But it still looks bullish.
Yeah, I think this is bullish. So I'll just say, so typically we'll go from a volume perspective, peak to peak. So we're over this one right here. This is your last break in structure. So I'll just use this BOS for break in structure. If you get this kind of little dip type thing, that would be like that little, what do you call it? V out. And that would set you up for like a dip buy around 81.74 if you get it. Otherwise, retest around 83, and I would say targeting 87.50 to the upside nearest term on crude. Just those futures right there. Barring any kind of political setup. Gold, different story, man. We are in no man's land, just uncharted territory, my friends. Yes, we are extended, but I will say we are squeezing on the week, squeezing on the month. I believe we're squeezing on the quarter. Oh yeah, we're squeezing on the quarter, month, week, and absolutely day. It's a little toppy. Well, we talked about GVZ, gold volatility index, and I said 17, right, Sharky. 17 is where we want to sell. Guess where Sharky and I trimmed this morning. Boom. Pretty much tagged that 17 number right out of the gate. Over here, this is not where you want to be buying gold options. This is the gold volatility index. And so if you're not familiar with how gold options trade, GLD options, as gold goes up, nobody's really buying gold options when the market's going sideways or down. I'll just tell you that. But they get real frothy when it starts going up, and you can really see it in this kind of setup. And so at 17, that's prime for some profit taking for sure. Can it go higher? Yeah, you betcha. But yeah, I think that
especially
was
with these moves that we're seeing when you pull out to the quarterly or the weekly. The weekly chart, I think, finally has made that move on.
In the pre-market, gold moved an average week's range. We'll just say that.
Yeah,
And coming into this week, gold had already moved an average quarter's range, quite frankly, within a week. But the setup is just so ridiculous where it's very much justified, right? Like, what I'll do really quick. Does anybody do this anymore? You might fry me for doing this, but I'll just give you some extensions on this, like
I think extensions are good, especially when you get into no man's land.
Yeah, so we're in no man's land, and you do have to use extensions when you're there, right? So no triple top, that's what we know. 1, 2, 3 tops, locking a higher low. There's no way this is going down. That's your cue. So extensions work like this. If you're old school and you remember, people trading the box, like, right, like, are you in the box? All an extension is duplicating the box, right? So one box range is just this green, right? So a full
that's normally the target once you get out of the box. It's a double.
Yeah, a full extension. So that said, if you want to add time to it, it's literally okay. This is shenanigans and witchcraft here, but you would take this and you would flip it right over there and say by September, you should expect this to be at 235, right? We're in like July. Cons, I would say 220. I say we. I am. I don't know. Sharky, I believe, is also at 220, 215. You're at a 50% extension of this consolidation. 618, you're about 220. So 215, 220, those are the real, like, I'm out 70%, maybe runners post that. And if we're really lucky, that 235 was that number, hence I have a 230 strike. So that's why, if you were wondering. But there you have it on the gold extensions. So that's gold. For the chart request, let's do a couple more. So I got CELH, and we talked about this. We talked about this in the beginning part of the stream. So Celsius got hit last week with like that. The price started going down last week right here. So this is where that kind of like news event came out, renegotiating their kind of like Disney distribution deal from a daily perspective. So we have our power earnings gap here. The way this works really is I'm going to take from the gap to here, and I'm going to not use an extension, but just to base a 50% retrace of that earnings gap on Celsius is exactly where we're sitting, 82, right? So if I get a spot, and I did grab some calls on Thursday, if I get a spot just sub 80, which I've closed, then I think that's going to be ideal. We're going to be battling with a 20-day simple moving average for a little bit here. It's significantly further away. If we do get that dip, there's a 50-day slightly below us where we are. I think this kind of bases out though right now, and I like where we're sitting, but I really want to see it closing over 83, right? And again, this is that kind of like from your power earnings gap, not from the low, but just from that prior close to the peak high. 50% retrace of this range is going to put you at 83. If we can start trending over that, meaning like get a couple closes, what I'm going to look for is a second higher low, right? So not here, right? Right now we have a new low. So after we've broken this 20-day, right, I'm going to look for the next higher low. So it's not today, maybe tomorrow, maybe the next day. But once we lock in, a higher low, then I'll go ahead and reload from there. But that's what I'm going to watch for on Celsius. Okay, so what's the next one? I think snow, right? So I did not do snow. Let's do it right now. So snowflake, I love the spot. What I'd say is here's the daily, or actually here's the weekly. Let's just take a look at the weekly. So if you're not familiar with like Wyckoff and things like that, this is kind of like technically coming right back in. You have this first break and then you pull back in and you sit right into this kind of like liquidity area. And we've pulled back pretty much exactly. This right here is this range. So it sat in right about 50% of that range. So anywhere in this level is kind of like my dip buys that I'm looking for. There is one more possible dip.
And you're just trading
I'm not-
equity on that, right? Or are you trading options?
yeah. So I have equity, and I started small options, but it's all like it's mostly equity. So there's a gap here from a daily perspective at 150 spot 45. To me, this kind of liquidity grab that landed at 150 140 was close enough for government work to be filled in my mind. And then since we locked in a higher low right here after that, I was like, okay, I'm gonna start right. And honestly, that's been really what I'm working off of. Can it go lower? It can, right? It really can. So what I want to do, this was my first kind of entry zone, and this was that 151 level, and here's that big pre-market spot, and this is kind of why, all of this. Let's go back to a 30-minute because I like the 30-minute from an analytics perspective. You can see on a 30-minute, look, I mean, just massive buy right here. They're like major stepping in anything. This is like 145. I don't think it gets anywhere close to that. Anything near 150, it's just buy, big push up, little like paper handlers, but they immediately get back in. And to me, we have the like very basic 50-day or 20-day simple moving average. I would honestly just take this last trend line right here for these last 1, 2, 3 days and wait for it to break before I really like get excited, because we haven't broken this yet, right? So it's still in a setup mode. I'm looking at this. So this is the day that we got the announcement. The CEO buys a bunch of shares. What really kept me in my interest here is, again, 30-minute candlesticks. I can see where like they're stepping in here. It's like 159, major candle, 160. So over 160, I'm still pretty bullish here. And we just kind of tagged that just barely this morning. Honestly, I think we're good. And quite frankly, as long as we're locking in a higher low could look as low as 153 and get off and go, right? Because if this is the last low, 151.30, I want that to hold. And so I'm looking at really this kind of like basing here and all of this being built, right? So this is kind of like what I want to see hold. But can it pull like a little liquidity grab down here? It could. And that would look like 153.20, possibly. But I want that to hold regardless. And even still, like honestly, even if it breaks, because I'm mostly equity, I'll still be a buyer. I think that we do run up into that earnings, but that's like not till May. So all of this to me, regardless, is just kind of like dip buy. There's a difference between a bottom being in and something being ready to roll like to the upside. This isn't necessarily ready to roll to the upside. We still have some work to do from like a consolidation perspective. That's what's true. So I'd be a little cautious, like thinking
Lucky,
that
the
it's going to
long
go.
road home, right?
Yeah, it's a long road. It could be a very long road. We're not even over a 20-day yet, right? But that's what's been giving everybody. That's what's been giving this stock technically a lot of trouble. Is this gray line here? That's the 20-day simple moving average, and we want to see that really just break, right? That red line is a 200. So once we do like accept over the 20-day, that first target is going to be the 200-day. That's about 175. And that would be for like any short-term trades, meaning like options, things like that. Over 175, acceptance over 175, we're looking for that 200 or 190 type level, and then we'll see where we go from there. But yeah, Bucky, the long road home. Again, difference between a bottom being in and something being ready to break out, right? So, here's a chart of 3M. We talked about this earlier. New CEO. All right, they just spun off their healthcare department. When I said look at this chart, guys, look at this chart right here at $81.40. This is calculating that most recent spinoff. So this is a perfect example of a bottom might be in, but from a bottom being in here, honestly, this is a weekly chart. It's gone really nowhere for 154 days. So just because a low it might be in, it doesn't mean the chart's ready to accept the upside. But 3M, which nobody ever talks about, put this on your radar, because what happens is you get this kind of breakout like this here. This is going to be a character change in the stock, and that's over post split over 95.50. You get acceptance over that, and you'll start seeing FinTwit talk about this bad boy and the reversal of all reversals possibly incoming, because that's not going to be a little one. Just my thoughts, right? Oh, look is that Frankie? Uncle Frank. What's up, man? GLD, is GLD the same as GDX? No, GLD is not the same as GDX. So here's the thing about GDX. GDX is miners, and so that's equity assets, like companies. So for GDX to continue to the upside, not only does gold need to do well, but the equity market as a whole also needs to do well. What I would say is if in this GDX compound, the chart of all charts is NEM, Newmont Mining. If you're in the server, but again, this is a big reversal here on a fundamental perspective. They recently posted earnings. They're growing about 28% year over year. Believe it or not, this was a dividend play forever. They cut the dividend. And so I think, it was, look at this, good earnings, price goes down, all the dividend investors shaken out, consolidate for, I don't know, a week or so. Now we're breaking out, right? So this chart here, which still does pay a decent dividend, but you don't want to beat it for dividend, is switching from a dividend low growth type company to actually a growth company. You'd have to read into their earnings reports and things like that, but they're doing there's a lot of changes under the hood at Newmont right now. So in terms of gold versus GDX, so NEM, I'm talking about this because this is like the largest component of GDX. So as long as you see stuff like this continuing, AEM, I believe is another one, Agnico, is another like large miner. These charts look good, right? Just not breaking out. GDX as a whole, looks good. So again, if we're bullish overall equity market, gold at all-time highs. Look at this. In terms of where's the steel in the market, what's cheap? My thesis on the gold miners and NEM specifically. Look, gold trading absolute all-time highs. The market at all-time highs, but the miners at like 2-3 year lows. It just made no sense. And then to find one where it was having a turnaround story, that did have a turnaround story, with growth, these were cheap. These are cheap. So can this continue? Yeah, it can, but just know that the equity market has to continue as well. So that's all. Yeah, does so like this is Snow has a couple gaps below to 135. Yeah, 140, 135. Snow has gaps there, but like I said, that's why I'd be more comfortable. This is why I'm spending some time talking about. There's a difference between something having put the bottom in, like what were we talking about last week? End phase. I think honestly, I think end phase's bottom is in, quite frankly. And I usually take this kind of reaction, poor earnings, really good price action. Uh, what, what's up, Trendspider? Poor earnings, but good price action as a staple sign of the bottom beating. But just because that might be there, it doesn't mean that the stock's really ready to roll, right? So something like that. We got a request for a cat. Yeah, I'm not really worried about the gaps, right? Just because a gap is there, it doesn't mean it's filled. Look at Boeing, how many gaps are there? So, request is for a cat. Uh, yeah, cat is a double top, right? Like, so of the indices, diamonds are pretty much the most extended. I think this is one where I would be looking at maybe rotating out of. Personally, it's an interesting setup. What's true on cat is that it can't go higher yet. It might still be a dip buy. I'd be cautious. I would just kind of sit this one out, to be honest. I gotta wait. This is one of the strongest charts of the market. Man. But let's see. Sharky, how's the house of the mouse looking?
I think it's looking pretty good.
Looking good. So we Catalyst Day, Investor Day. Here we are. I'm just gonna take a quick look. Weekly. I'm gonna get all this stuff out. So we had that power earnings gap on Disney, right? And we know, just because this is a perfect example. Then after that, we spent a month and a half going nowhere, sideways. Now we're starting to break out. Looks like that extension has happened. Now, where do we go? So
I am watching it for a possible swing play, but
yeah,
I can't get in
we
here.
have a catalyst on deck, right? And I think that's, this is a very, very critical level, right? So Disney at 120, I'll just say, if you don't know, Disney at 120 is a major pivot. Just know that it is, right? I mean, it's probably like pivot of all pivots on Disney. We're talking in terms of like whether it's this double top from way back when, or this whole setup and that bottom, that epic bottom right here, or the breakdown
chart
previously. Yeah, well,
sorry.
Right now,
sorry. I was looking at tech. Sorry, at the moment, intraday. Sorry.
Where we're sitting right now, that's 120 spot 65. This is Disney right now. 120 spot 65 is a 50 cents away, right? So if it's trading below that, or like, I think that's going to be the pivot, right? And it's going to come down to really this. So I think, honestly, Disney goes nowhere until the third, until their investor meeting. That's my gut. So I would really just wait. I would wait. Can we look at NVIDIA? Sure. And then maybe got time for one from Sharky, and that's it.
Well, why don't we do Etsy after?
Oh, you want to look at Etsy? Okay. Yeah. So NVIDIA here's where we are at NVIDIA. So all year long, per the request, below the 20 SMA. So I think this is crucial, right? So I'm just gonna hide all my drawings. So all year, here's the 20. So the gray line is the 20-day simple moving average on a daily perspective. I don't use any other moving averages. It's a simple moving average, not an exponential, and it's all locked into a daily time frame. So we got the first kind of like break, retest, dink. This is ready to roll right at the beginning of the year. We got one retest right around earnings. And this is the first time that we've really started to come in and test it. I would not consider this below right now. Like, this is an intraday.
We were just talking about Disney. Some call flow just came in for Disney, actually.
Yeah. No, I mean, there's catalyst on deck, and that catalyst is a big one. And this is a spot similar to SPY, where if we're talking about retesting an annual trend line, right now. It's like it's when it looks really bad and you're literally sitting on it. Those are the times where, like, honestly, people are like looking like they're about to short, and you blink, and this candle turns green. What I can say, this is a 5-minute chart. Low, so lower high, lower low, higher low. This is a 5-minute chart. Take it for what it is. I wouldn't go anywhere with this one just yet. I would just watch it. I wouldn't want to sell this until it's like below this entire consolidation level. Because let's just take a look on a daily perspective. If we were looking at NVIDIA here previously, you would have said that support was all of this, right? And that prior breakdown, even in here. So here was that double top breakout. And then if I move this forward to where we are today, we're still well above it. So I really wouldn't be interested in shorting NVIDIA until like you have a clean open and close below. I'm going to call it this volume shelf 880. It's 885, but I would give myself like a lot of wiggle room. And even then, it would not be a swing. It would be a day trade because you never know. They're like clean gaps to 823, but I don't want to get in the way of something like this, to be fair. Maybe it pays, but you can only take so many lottos before you run out of money. I'll just say that. Can I go back to CC wants to go back to 3M. So the gap down this morning, CC was on the spinoff. So they spun off their healthcare sector. So all your kind of charts need to be readjusted really quick. But we start out on weekly, and just from a clean perspective, this was that double bottom kind of retest. If I throw some basic moving averages on, this is blue. So red is 200, blue is 50, white is 20. Remember, we're looking for positions where all your moving averages are real tight. And this is as tight gets. Unfortunately, you got earnings coming up at the end of the month, so that's going to be the catalyst. I expect a little bit of a pre-earnings run up right now. So I would expect this to run up into earnings, and then the rubber hits the road. We don't really know what's going to happen post earnings. XPI. Last one. And then Sharkies. XVI, I like it. Breakout retest. Is biotech. Breakout retest. Want to see it hold over that last kind of volume shelf. Over here. 88. Okay, Sharky. What was yours?
Why don't we take a look at Etsy?
Etsy. Oh, well, Etsy, it's a similar. So it can't get over its 20-day right now. I'm going to zoom out really quick and just take a look at the weekly. So weekly's got kind of like this bottoming setup.
Yeah, that's where it interests me. Retesting that huge base there.
Yeah. So you mean this recent base right in here?
No. I mean, if you went back on the weekly, further back
all this,
yeah, and bring that, the highs of that and bring it all the way back if you want to do like a demand area.
Yeah. So so this is like, so Etsy is gonna be good. Let's give it 73.33 if it's trending over that, as I see it based on the charts. It's a watch. So I would take the top of that because I can get confluence here with this pivot breakout. 73. Could it be a dip buy between now and then? It could be, but I don't know how deep the dip would go. Does that make sense? What's true is that this most recent very long base, you're basically retesting it. And I like this spot. This is 65. I'm going to take this down. You can call this like fair value spot. I'm going to zoom in on a daily. And there's a gap, 64.05. And I have a nice little volume shelf that I could trade against. So if this is going to hold, this is a pretty long recent base. So a recent 2-month base, I think you could trade against that, quite frankly. May 1st earnings. Yeah, I'm just looking at this oscillator. Kind of bullish divergence also, just on a daily oscillator perspective, meaning like if this is the lows on the oscillator here, the chart's making a little bit lower lows, but the oscillator's not. Does that make sense? This is not. So it's a exhaustion to the downside. It's having a hard time going lower. So I would look at that spot, 64. Really interesting. Right there. Let me refine this. Can we get it even tighter? 63.49. How's that? $63.49 with the volume shelf right there. Set your alerts. I like that. To watch. It gets there. You look. Could be a major reaction level. But not yet. That's where they think it's going to break down, but then it just turns around. What oscillator? That's it's like a multi.
And Etsy can move too. You can have a 5%
it squeezes. Etsy's one where like you kind of want to take a small pot shot right there, because it just like boom, like explosion right after, like the next day, right? Just like this, boom, all the time, right? You hit a level, it's boom, straight through. XPI was like J&J, like really basing. I almost put J&J in the long term recently, like really close to it, man. Really, really close to it. Big old base retesting. This stock has gone absolutely nowhere. But if the safety trade is in swing, right? And if this is locking in a higher low pre-earnings, it's really interesting to me retesting this shelf. Not that this is a very exciting stock, but dink retest. It's interesting. Maybe not ready, but it's building a base too. Something to watch. All right, guys. I think that's it for me. Sharky, you rock, sir.
That's it.
You're the man.
It's the end.
We got to send you a new camera.
Made it.
I can't do anything about your internet connection, though. It's all good. All right, guys.
No,
love you all. Appreciate you guys showing up. I'm going to hop on Spaces a little bit later. But till next time, see you out there.